Webinar on consultation paper on verification of market rumors. The objective of the webinar is to discuss the recommendation put forth by SEBI-appointed Industry Standards Forum and gain insight into the potential implication and impact of the proposed changes. The various perspectives and suggestions of the pertinent enumerate at the webinar will be collated and sent to the SEBI for its consideration. Friends, as you are aware that market manipulation is one of the biggest problem in capital market, and the rumor is also adding substantial part to the market manipulation. But sometimes the rumor are good also, rumor are bad also, and sometimes rumor is just for the taking manipulation in the market. So that's why SEBI came out that if there is any rumor, you have to send to the stock exchange, and stock exchange is also continuously, whenever they are seeing, they are sending letters to the company. So they are sending letters on the two aspects. One is that whenever there is a price fluctuation, they send notice to the company and ask them that why the price has gone up. And then sometimes there's a merger news, there's some takeover news in the newspaper. And then they ask whether this report is right or not, because on the basis of the report, the investor purchase shares and there's a price movement. But in the process, that there are so many things has come now. SEBI proposed the last consultative paper, and they gave this suggestion that whatever rumor is there, you have to submit to the stock exchange. So earlier the stock exchange was asking, now they asked that company has to submit within 24 hours of that rumor. So the issue which has come out, and then you have to confirm the rumor, and then transaction is in the process, then what will be the price of that particular rumor verification. So many new issue has erupted in this process. So if you see the first provision of Regulation 3011 of LODR Regulation requires listed entity to verify and confirm, deny or clarify market rumors which are reported in the mainstream media. The rumor verification requirement shall be applicable to top 100 listed companies with effect from 1st February 2024. Now this is after a month. And to top 250 listed company with effect from 1st August 2024. So 350 companies has to follow this up to 1st August in the SEBI Circular which they have given. Now, with a view of promoting ease of doing business, because this, what is the process, what are the things this is coming out, rumor verification, that was a very cumbersome process which industry has proposed, submitted to SEBI, that this particular regulation is creating a lots of problem to the company. So with a view to promoting ease of doing business, SEBI released a consultative paper on amendment of SEBI regulation with respect to verification of market rumors, because SEBI came out with so many things, but this was the most important and most vulnerable topic and the problematic topic for the corporate world. The deadline for submitting comments to SEBI is January 18th, after a few days. So that's why we are organizing this program. So we are in whatever we discussed today and whatever points we can come out, we can submit to the SEBI. So SEBI can come out with a proper regulation with this. The consultative paper seek comments, views, suggestions from the public on the following aspects. One is material price movement on the criteria to verify market rumors instead of material event in terms of Regulation 30 of SEBI Regulation 2015. Because what was happening, the SEBI was saying that you have to submit the information on material event. So sometimes material event is confusing. Then second is material event is there, but there is no price movement. So they have changed this material event to material price movement. And then they have given a criteria also that how to calculate the material event. So that is one part which we have to see and discuss today. Then second is the mechanism to ensure that unaffected price is considered with respect to transaction relating to securities of the listed entity upon confirmation of market rumor. Now what is happening, that sometimes the company is doing any transaction, say takeover offer, say insider trading, takeover offer, the M&A transaction, buyback, any transaction. And in that case, the rumor is there that a company is taking over. So there is every transaction which is taking place, and SEBI has identified there are 4 or 5 types of transaction: the right issue, preferential issue, QIP, bonus issue, buyback, tender offer, open offer, book building offer, delisting, and takeover offer. These all transaction has some pricing formula. So like delisting and takeover has a 60 days trading. From the day you have a relevant day, that is the 60-day trading days. Then in preferential issue, 90 days and 10 days. And the QIP 10 days before the board meeting, that should be the relevant price. So every transaction which is corporate action which is taking place, it has a different price. So that's why there was a discussion in the various forum that if you have to confirm some price, you have to confirm something that this is the price, this is rumor is correct, then which price you will take? The price which is provided by the regulation, or the price which is when you are confirming the rumor? Because if you are confirming that I am doing merger or I am taking over this company, the price will go up, and the purpose of this transaction will be I think it will not be commercial transaction favorable to the company, or it's a genuine, not really a genuine transaction. So that's why unaffected price consideration concept has come out, which we will discuss. This is the one of the most complicated point which we will discuss today. Second point came out: obligation of promoter, director, KMP, and senior manager to provide adequate and accurate and timely response to query raised on or explanation sought in respect of market rumors by the listed entity in order to ensure compliance. So sometimes what is happening, some news has come that the director has died, or director has some problem, he's hospitalized, or he's in the process of resigning the company. So all these issues are there. So the responsibility was on the company. So now they are suggesting that this particular thing, responsibility should come onto the promoter, director, KMP, and senior management to confirm that news, that whether it's right or not. So this will, all this of various combination we'll discuss. Classification of information which are not verified by the listed entities at UPSI. Now, sometime what is happening, that some news is there and the company is not confirming, and after that the market is affecting and the news is correct, then what will be the impact, that we will discuss in the fourth part. So these are the 4 issues which SEBI has prescribed, and then there are multiple questions in the all 4 issues. So we will discuss threadbare of each and every aspect. So today we have requested the learned speakers on this aspects. So first I extend a very hearty welcome to our learned speaker. We have Aviskar Nayak. He is a vice president in listing NSC. He has been working in NSC for the last 18 years and have headed various departments such as investigation, surveillance, clearing, corporation, technology, and listing. He has been awarded CA Professional Achiever Award by ICI. I welcome Avishkar for this program. Then we have Narayan Shankar with us. He's a vice president and company secretary at Mahindra and Mahindra. He has the experience of more than 2 decades in secretarial compliance and listed entity. And he's a part of the various committee of SEBI, like ESOP committee, and he's a member of Secretarial Standard Board of Institute of Company Secretary. So I welcome Narayan for this program, and your views and your things which you are practically facing will be helpful to us. Then we have a Geetika Anand. She is a company secretary and compliance officer of Hindalco Industry Limited. She joined Aditya Birla Group in 2006 and continued to be associated with the group with diversified experience in corporate secretarial compliance, corporate restructuring, and M&A. And I welcome Geetika for this, and I'm grateful, Geetika. She is not in India, and despite of this, she is taking part. That is another aspects we welcome for this part. Then we have a Savitri Parekh. She is companies having a 28 years experience in corporate. She is a company secretary and compliance officer of Reliance Industry. She has worked in various sector, including manufacturer, outsourcing, service, private equity, media, pharmaceutical, textile, chemical. She's a specialist editor of Ramaiya Guide of Companies Act and general editor MC Bhandari Guide of Company Law Procedure. And we call Savitri Chalta Firta Ramaiya also. And she is one of the learned speaker in the country, along with Narayan and Geetika. So I welcome Savitri. She is just joining. Then we have Ankit Singhi with us. He is a company secretary and head corporate affairs committee, office affairs and compliance of corporate profession. I welcome Ankit. And we have Anjali, partner head capital market services, corporate profession. And we have Nitesh Ratwal, associate partner corporate profession and compliance. PK, he was supposed to join from Cambridge. He's studying in Cambridge nowadays for higher studies. He got some medical problems, so that's why he was not able to speak. That's why he's not joining. But his blessings and his always good wishes are with us. So thank you all for joining today's program. So now I will tell you what will be the structure of this program. The program structure will like this, that there are 4 points. And I will first, Ankit Singhi will give the presentation on this part on each topic. And that what is the law, what SEBI is prescribing. And then SEBI has asked 3 to 4 questions in each topic. And these questions we will discuss. And every panelist will give his point of view, that what are the issues, how to solve this, and how to bring correctness in this, so we can have a effective summary and conclusion to SEBI. And with your experience, it will be very useful for all of us. Now, the 2-3 things which I just want to discuss with all of you. Now, this type of law which are there, and when you want to make it perfect, make a perfect regulation, it is not possible, because every transaction has a multiple face, and multiple facet, because of multiple facet, you cannot solve all problem. So here also, I am just studying this, and I saw this, that because we will face interpretational challenge, we'll face complexity in the interpretation, we'll face market volatility concern, we'll face insider trading risk, and legal interpretation issue is also there. Impact of investor confidence is also, because if you're not coming out with proper things, then it will be a problem. Adoption and compliance challenges is there. Monitoring and enforcement is also very risky thing for stock exchange, and they have to be on toes. And market manipulation risk is not also, you can avoid this. Lack of clarity on guidelines, because when you come out with guidelines, and if it's no clarity, then it will be a problem. And the solution which will be there, and then we'll discuss today, that clear definition and guidance should be there. Robust monitoring and surveillance system should be there. Enhanced investor education should be there. So they should understand, because we are talking about some complex point. It is not simple point, and every company has to be on toes on this. Continuous market awareness program should be there. Strengthening insider trading regulation, because after doing this, you have to modify and tweak the insider trading regulation. Regular review and adoption is also required, because today, whatever you are visualizing, you are doing, but you have to see something more also. And regularly you have to change. Engagement and collaboration is required, because industry bodies and the companies will come out with different point of view, and you cannot completely divide and decide on all aspects. And then clarity in the reporting obligation, that is also required, because reporting obligation should not be vague. It should be very clear. Technological integration is also very important issue, and training and capacity building of the people, those who want to do this. And today, when I was coming for this program, I was just reading that whether this is a new concept. Then I saw there are so many research paper are available on the system where we can get it. Like I was just saying, Young Fence 2007, they discuss about the importance of establishing the special institution and standing mechanisms for market value management in listed companies related to this rumor verification, and then DeFangio and Barodia. That is explored in 97. It is not today. How the rumor affect trading decision in the stock market through two experimental stock market simulation they have. This is also a research paper, and Avishkar and myself is also in the committee of the Indian Industry Standard Forum. So Avishkar, I will take out and send it to you. So we'll take these reports, and then Henshi Aichu. This is another report in 2010 analyzed takeover rumors in publicly traded US companies from 90 to 2008, finding the market response to rumors to the rumor day and the day after the statistically indifferent and that trading on such rumors. Then DeFangio and Barodia, which I just showed to you. In 94 also they came out with this, these are the two authors. They came out two reports. And then an Indian author, Majumdar and Bose, in 2018, they introduced a framework for automated direction of financial rumors using big data, focusing on Bombay Stock Exchange to identify information-based market manipulation. So, Avishkar, these reports I will take out and share with you. So, in the next meeting, we will take advantage of these reports. So, without taking much time, I'll request Ankit to start with this. The first part. So you just what we'll do. These are the four. The program will be divided into 4 parts. So you discuss first part, then the question, then second part, then question, then second, third, and fourth. So everybody will give their point of view, and we will conclude it how to write to SEBI. Yeah, over to you, Ankit.
Thank you, sir, and good evening to everyone. So, while you've already given a brief overview as to what is the topic of discussion today, just to add on that, in this year, last year, I think 2023, in June, SEBI amended these LODR regulations and brought widespread amendments. And one of the key regulation which got amended in a very in a way that it completely turned around the scheme of things is Regulation 30. And Schedule 3, which is where the events are listed in terms of Part A, Part B, and other parts. Under that regulation, earlier there is a obligation, discretionary obligation on the listed entity to deny or clarify if any rumor is there with respect to any of the events in the market. It's a very general regulation that was there, and companies were under no mandate as to clarify or verify the rumors, and they can, if they want to. There is a provision provided under Sub-Regulation 11. By way of the various amendments that was brought in the month of June last year, a key proviso was added as part of the Sub-Regulation 11, where an obligation was casted on certain categories of companies to disclose or to comment, to confirm, deny, in case there is any rumor which was spreading in the which was there in the mainstream media with respect to any impending material event or information. And in that case, within 24 hours, there was an obligation to respond to that rumor by way of a clarification or a denial. And then it was supposed to be applied to top 100 companies by 1st October 2023 and top 250 companies by 1st April 2024. Then later on in September, because of there were a lot of issues and confusions with respect to how this regulation will be complied, considering the practical and other logistic issues connected with it, with the India Inc. has already conveyed to SEBI. SEBI came out with a circular, and then it extended the applicability from 1st October to 1st February 2024 and 1st April 2024 to 1st August 2024 to 100 and 250 companies. And then last month, this consultation paper has been issued, and background has already been shared by sir. And this also forms part of the discussion note that Industry Standard Forum was constituted to look into the various concerns of the industry in respect to compliance of this requirement to clarify the rumors. and the committee, the forum looked into various aspects, and then advised as to come up with some solutions, some standards as to how which can be then looked into by SEBI and made it as part of the regulations or otherwise for the Indian to comply. And then there is a standard sort of guidance which everybody can use as a scale to dispel rumors as and when there is under the sub-regulation 11. So the dates I have already disclosed. So then coming to the consultation paper. So consultation paper discussed on some key themes as to how an event will be treated as material. It talks about price protection in case you disclose an event based on the requirement of confirming or denial and rumor. The obligations that will cost on promoters, managerial persons, directors to clarify the rumor if there is something which is connected with them. And then there is also a case where there is rumor, if there is a rumor in the market and that has not been confirmed, and in somebody trades basis on that rumor and as an insider, then that person cannot take the shelter that there was a rumor which is already there and there is not an UPSI, because something was already prevailing in the market. So these are the four factors where SEBI has brought out some suggestions or proposals as part of the consultation paper, and we'll discuss the same one by one. So first of the consideration as part proposal under the consultation paper is material movement, price movement as the criteria to respond to market rumors. So currently the proviso to the regulation talks about rumors in respect of impending material event or information. So the information that is there in the market which is in form of a rumor has to be out of the material events that are listed under the Schedule 3, Part A, Part B. Part A is material, Part B is determining the applicability of materiality threshold. So on those aspects, once if any event out of Part A or Part B, considering the case, is in the market, then it will be deemed as a material event in the market. And then accordingly, one has to respond to that event considering the market capitalization list which they are following. So one of the suggestion that is mooted under the discussion paper is that to determine an event as material which requires some clarification if there is a rumor in the market, if that rumor is in some way contributes to movement of the price on the stock exchange. So if there is some news in the market and then market responds to that, and then there is a movement in the price, then it will be deemed that this is the event which needs clarification on the part of the corporate. And if in that way, if there is a rumor and there is no impact, nothing is happening on the market price, then it will be deemed as not an event which is affecting the market price in any way, and that might not require any kind of response from the body corporate. So it says proposes defining materiality in terms of price movement in securities rather than solely relying on the event specified in Regulation 30 of LODR Regulations. So the price movement will be the factor to determine the materiality rather than the listing of the event in Schedule 3. And then it has gone to explain as to how and in what manner the price movement will be considered to determine the materiality. And then it has laid out. So as part of the discussion paper, it says that, for example, if there is a company which is a highly priced share, for example, a company which has 1,000 rupees share or 2,000 rupees share, a 2% change might be a significant change as opposed to a company which is, for example, 10 rupees, 50 rupees shares. So considering the price range, if it is a high price range, then a low percentage variation in the price movement will be considered as something which may determine and make that event as make that rumor as a material rumor. And in case it's a low price band share, then and a higher percentage which will be provided as part of the regulations, then it will be considered as a material event in that case. So higher price range, lower price movement will also trigger. Lower price range and higher price movement will trigger a disclosure on the part of the listed entity, treating that as a event which is a material event, and that needs to be either denied or clarified. Then while outlining that, the percentages will have to be considered in terms of price movement with respect to higher and lower price band. They have also said that the price movement in the in Nifty 50 and the Sensex will also have to be taken in account while determining the price movement in the specific stock. So, for example, if a particular day, if market is up on a higher percentage, and then a stock is also reacting to that movement in the higher index and is moving along, that adjustment needs to be taken into account before determining that is a material price movement on account of a specific rumor. Because if market is moving on the basis of some broad economic factors, and then stock is also reacting to that same price, then it would be difficult to ascertain that whether the stock is acting in terms of the broader indices, broader movement of all the stocks which are moving in a particular direction, or it is only moving on account of that particular rumor that is prevalent among the investing public. So they have outlined these two, and they have also given a practical example as to how the index movement and how the benchmark index movement and how the price movement will have to be collaborated and determined accordingly to find out whether there is a material price movement to determine the materiality, and which will trigger a rumor. And certain clarifications have been outlined. So there's index movement. So the movement of the index has to be considered at 9:30 on the trading day with respect to the closing price on the previous day. A percentage movement has to be looked into at any point of the day. If at any point of the day the percentage movement breaches the percentage limits that have been identified for that particular stock, which will be treated as a material price movement, then it has to be considered irrespective of the time. While the index movement percentages have to be calculated basis the price at 9:30 on that day, but for the specific stock, the price movement has to be seen throughout the throughout the day. Sorry, and in case of a negative news, parameter cutoff applicable will be on the opposite side as it has been outlined. And I'll request Anjali to throw some light as to how these price benchmark movements are expected to have an impact on the determining the materiality of price. Over to you, Anjali. You're not audible.
I'm not audible. Just a minute.
Yeah,
Yes, now.
audible,
Yes,
audible.
you are.
Is it
You are
okay now?
audible.
Yes.
Yeah.
So Anjali, just explain this.
So when we talk about the
No, not yet.
Am I audible?
Yes, you are now.
Yeah, okay. So when we talk about the benchmark index being greater than 1%, so what SEBI has explained in the example as well. Technical glitch on my side.
You just close your video and then tell.
Sir, if you are okay, I can take it with an example.
Yeah, let's do Avishkar.
Yeah.
Now you
If I
just
share the screen.
Avishkar, you are clearly audible. You can take it over. Go ahead, please, Avishkar.
So if I can share my screen, I will take
Go
it
ahead.
with an example.
Yeah, you can share. Ankit, just remove your screen.
So you are able to see this Excel.
Yes, it is visible.
So the entire idea is in this particular manner. Say example, your script is say trading at ₹1,000 in this particular example. And if there is some positive news surrounding your script on that day, then you have to look at say table 1. Table 1 is giving various instances that your stock may be say 5% down, 4% down, and similarly it can react in different ways, 1% down, 2%, 5% down. So, and on that very day, the Nifty movement can be also in different ways. In the sense, it can be up, down, or at the same levels. So, if we look at table 1, in that particular case, say example, if your stock is more than, it's a positive news, you are in the third bucket and the stock is up by 3%, then the verification has to be done in the sense 3%, 4%, and 5%. So in my sheet, row number 14, 15, and 16, in that cases, rumor verification becomes eligible.
Okay.
Now, if we take the second example, the table 2, here what I have tried to change is only the Nifty movement. In the sense, on that day when there was a positive news, the Nifty has also moved in the same direction. That is, it is up by 2%. So here what is happening is, say, take the example in row number 12, where the script is up 1% because of the positive news, but Nifty movement is 2%. So if you add it, it again goes to 3%. So that is not eligible. In a day where the Nifty is up by 2% and your stock is up by 3%, then you have to do a verification only after 5% price movement. So row number again 14, 15, 16. Then if we take this table 3, the third instance which can be the possible example. So there also what is happening is, say, because of the positive news, your stock is up by say 3, 4, 5%, but the Nifty that day is down by 2%. So again, that row, see row number 14, 15, 16. Since it's down, even though the total movement is down by 1%, 2%, then too you will have to go in for the disclosure. That's why in that N column, wherever it's 3%, 4%, 5%, I have said that verification has to be done. Similar is the instance where negative news. Negative news also is works on the same principles. That is, I'm just explaining one more table. Say I'm taking the example of table 5. So table 5 says that if there was a negative news in the script and the stock is down by 5%, but Nifty movement is up by 2%, then the verification has to be done only because your total movement is at 3% and above that.
Avishkarji, can you go on the table, on the first table, on the positive news,
Yeah.
and on table 2? Avishkarji, just my small question. So if for example, in last 3 rows, 14, 15, if Nifty is already at a movement at 2%, so in script movement, it would not be seen that 2% is a movement which is in response to the movement of Nifty?
No,
And then
so
over the top of it, we should see, is there any movement or not?
So the 2% is the advantage which the script is given. In the sense, what typically may happen is we also generally evidence that, say, a script can move because of various factors. It can be domestic, international, or whatever. The index will also react in that particular manner. So here, what we are trying to say is, say, example, there was a positive news, 3% movement, but the market, because of some external factor, is also up by 2%. So let the rumor verification be done at a higher threshold that way. So we are giving that additional advantage of 2% to the stock. That the stock.
That you are
Yeah,
adding 3%
no.
into
So Shivam,
3%
yeah,
and 2%, 5.
No, the Shivam, how it happens, Avishkar, correct me if I'm wrong, what the way we are reading it,
Yes.
if the Sensex or the benchmark index goes -1 to +1, there is no factoring required with the index. Then you do, if you are in part A, if you go to part A, Avishkar, and just show, I'll just try to explain. If you are in part A, that means threshold movement is -2 to +1. There is no factoring required. That means if Sensex goes down by up to 1%, or we have to see is have your stock gone by less than, it's absolute 3%, correct? That means even if it goes plus or minus, and if your stock goes -3% or +3%, positive or negative, you have to go and make a disclosure. Is that let us just stay right now only on part A. So if I have to give you a live example, Shivam, today, if you see Infosys price movement, 11th January, and Avishkar, it's a live example, and because Pawan believes only in live examples and putting all of us on doc. So 11th January, 3:29 p.m., 1,490. Closing 1520. Today opening 1562. So today, if you see the price, it is less than Sensex is -1 to 1%. So that company is more than 200 rupees. So we will see if there is at any point of time the share price has moved beyond 3%. So at many particular point of time, including the closing, it is below 3%. But at 2:32 p.m., one particular point, it has crossed 5%. So here the only point, Avishkar, we should really see, which is a practical problem. It will be difficult for company secretaries to keep on micromanaging. I'm saying at what time will it cross 3%? Because the 24 hours will start from that. There, what we may probably suggest, Avishkar, that the 24 hours should start from the time of updation of the daily data. Because sometimes the last trading price, Avishkar, comes late evening. We don't even get it by 4 o'clock or 5 o'clock. It happens sometimes even when we are doing ESOP disclosure, we sometimes wait beyond 6 o'clock also. So all I'm just wanting to say, for the help of company secretary, where they have to go into, and luckily for Infosys, we got a super duper company secretary, our money over there. He had already clarified before 11 a.m. today that it is not an account, there's no dividend declared, it's a false rumor, and clarified. But Avishkar, if he would not have clarified, then at 2:32, when he's crossing the 3%, the trigger of market rumor would have applied to them. So he has been ahead of the curve. He has clarified even before that. Otherwise, the 24-hour will start at 2:32 p.m. today, Avishkar. Because the Sensex, if I'm not meant, index was 0.5%. It will be in A, category A, and hence absolute 3% would be applied over there. The only thing is 24 hours when we are talking is time when the stock is completely updated, which happens late in the evening. Otherwise, it will become very difficult to keep monitoring the 24 hours at what time it goes.
Narayan, you have raised another point, that how the 24 hours, because there is a possibility that price fluctuation is taking place for 24 hours. You are taking. I'm just coming to your point, but Avishkar, I think the presentation of these slides which you have shown is creating confusion. What Ankit is asking, this is 3, 4, first table is okay. But second table, if I'll
come to the second table. I'll come to the second table. Give me a minute. I first wanted to give you just an example, Pawan, for table A. For table A, what Avishkar is telling, there is no factoring required. For table
that's right,
A,
absolutely.
Now can we go to table B? Now, Avishkar, if you can go to table B, let me also try in my level.
Yeah, table
you
B
are about the 200. Presume all the companies which are about 200, correct? Yeah. So there, Pawan, what they are telling, you will get a factoring of 3%. That means if the benchmark index is greater than 1%, that means if the benchmark index moves more than 1%, then the script has to move more than 4%. That means 3 plus 1. You have the 3 plus,
Just to interrupt, are you seeing the slide which Avishkar sir has Excel, or you are seeing the consultation paper tables?
It is the same as what I'm trying to tell.
Okay.
The table, whether if it is negative news in table 2 or positive, it will be the same is what I'm trying to tell. All I'm wanting to tell is in script, if you are in B, that means if the benchmark index is moved more than 1%, then you will require a factoring. They have added the factoring to the benefit of the company. That means the benchmark index is more than 1%. Then if I have to see M&M, I will see whether M&M script is more than 4%. The 3 is a factoring to be added to the index, 3 plus 1. If today the index would have moved by 2%, I will see if M&M has gone more than 5%. So there is an advantage to the company. Add more than 1%. If it is, add it to the 3% is a mathematical calculation. It's like maths formula which you have. Whatever is the index, आपको 3% add करना है because you are more than 200. So if I have to give you,
in that case, in table 2, the disclosure will only trigger at 5.
Right.
Because 3 plus 2 will be only 5. 4 plus 2
but
is...
no. If it is more than 1%, say 1.01, it will be 4.01. If it is 2, it will be 3 plus 2. If it is 3, it will be 3 plus 3.
Right,
If
right.
as per benchmark, if it is greater than 1 for price price range is 200 plus, then it will be 3 plus the benchmark movement. So in the table
Absolutely.
2, the
The
benchmark
only
movement is 2. So 3 plus
no,
2, 5. So only in case of script, when it moves 5%, then only the
absolutely.
disclosure.
So here, Avishkar, there is only one clarity which is required. If you see the heading and the language is 3+%, that means if BI is more than 1%, if negative news, script is more than -4%, I will verify. But if benchmark index is more than say 1%, if negative news, but the company script is more than +4% in spite of negative, I will not verify. That is where I have a difference with you, Avishkar.
Okay, so that scenario which you said is in the negative news. Na? In the sense, the example which you said is this index itself is down by say 1%, and the script is also negative 5%. That way.
Yeah, yeah.
So that table 6 comes into here. Also, we are giving that benefit in the sense 5
No,
plus
what I'm trying to tell is the point 3 of your example tells in case of negative news, parameter cutoff will be on opposite side. There is no equivalent for positive news. So what I'm wanting to tell in point B, where you have used the word 3+%, if the BI is more than say +1%, that means benchmark index is positive, what I'm trying to tell.
Yes.
But company is negative.
Right.
But yet the company goes more than 4%. I am saying there's no need to clarify as per your current guidelines.
Acha, okay, Narayan, Avishkar, just go to your first, second, third slide. Just go to that.
Are you getting what I'm telling, Avishkar? Unless we change the language, I will say if it is benchmark has gone up, negative news of the company, but it is more than 4%, I will only go for minus. I will not go for plus.
Narayan, I'm just suggesting one thing.
Go ahead, please.
Please come to the table number 2.
And then I'll go to C. First, let's complete B.
No, Avishkar, just see table number 2. Okay.
Yes.
The table number 2, is it not that if the index is going 2%, my script is going 3%?
No, hold on first. Avishkar, this table 2 is para B or para C you're referring to?
It is
Sir, it is para B, I believe so.
B.
It is
Para B. So then I'll
Yes.
answer according. I'm just
Yes,
wanting to be
it is
doubly
para B.
sure. It is para B, correct? Now go
Yes.
ahead, Pawan. Sorry.
Okay. So Avishkar, if we are, because this calculation which you are showing, prima facie, it's creating confusion and when the number. So now, suppose the script movement is 1%
Yes.
and Nifty is 2%.
Yes.
No need. So first no is okay. Now come to the yes. So script movement is 3% and Nifty movement is 2%. Suppose I'm utilizing the 2% because Nifty is going
Yes.
up 2%. So I'm taking 2. This should be 1. So it means
No, you have to add. Now 3 plus 2, 5. What he's done is
Sir,
right.
so sir, it means then the price movement has to be 5.
5.
Yeah,
Yes,
absolutely.
but if
That's
you
why
see
I
in
marked
case of
it in
14,
green.
in case of 14, the price movement is only 3. The price movement has to be 5 in that case.
Yes. So that's why that marked in green is that particular threshold where that S kicks in.
Sir,
So I'm
as per
saying
the
there is a confusion,
example,
Shivam. What you're saying is right. That means if it was only 3%, there is no need.
yes,
You are saying is
yes.
bang on. I'm completely agreeing. That
It has to
means
be 5.
it has to be 5 and above.
Yes.
Absolutely.
so now,
So
so
only
Avishkar, suppose market is going 100 point up. I'm just saying 100 point up,
The
200.
percentage, Pawan, 2% up. Okay,
2%.
So
go ahead.
market is 2% up, 3%
Yeah.
up, 4% up. Then the script is also on the same line. But if the script is going higher than the market index movement, then I have to report because something additional has to be.
So then the table 3, if you see, it's covering that example that the stock is up and the market is down. So total movement, you may say it's netted off, but since here we are not giving that benefit, it is 3, 4, 5. So here, if the stock has moved by 3%, even though market is down by say 2%, then this rumor verification gets shorted.
yes, that is right because 1% script movement will trigger and it is 3.
Absolutely. But the point is, in this minus, Avishkar, what is happening? If benchmark index is more than say -1%, there is a positive news on the company. And the company's script 3 plus 1, it goes up by 4%. The way I read it, I will not give a verification.
But Narayan, this 3
I'm
plus
not.
3 minus 2 is a 5% up of the market script of the company movement. So 2% Nifty down.
No, I'm table 2 is equivalent to B. I'm agreeing. I'm telling if table 3 is equivalent to C, Avishkar.
So C also what basically is our observation somewhere. We'll have to clarify it.
We'll have to clarify because C is for negative, B is for positive. So I will see whether it comes under B and C accordingly decide. So we will. So I'm telling if what you are telling is right, we will have to slightly tweak the language for B and C. We'll come. That can even be discussed offline. No issues. I'm just trying to tell. But it is.
Yeah.
Yeah, go ahead. And Pawan, if you see, just to touch upon international rules, okay? This is equivalent to what you find in UK. Since you made a mention of some international rules, in UK you've got a rule called put up or shut up, which is called PUSU. So under UK takeover code, if there is a leak, there the bidder has to announce a fully financing bid within 28 days. And if the bidder is not able to, then they tell you have to do a 6-month standstill. That means you can't do any transaction for 6 months.
Absolutely right.
The takeover panel has got power to relax, but I've never seen them relaxing anything. Okay. Most prospective bidders they detest this rule because it's very difficult. If there is, they've got a maximum risk because if there is a leak and this PUSU obligation is triggered, then their 28 days deadline starts ticking in and you have to ensure that you complete the bid within that.
Avishkar, just open your slides. Ankit, just close it. Avishkar,
sure, go ahead.
Yes, sir.
And by the time he's opening, Pawan, in UK, the starting point for analysis is a movement of 5% at any point during a trading day, or 10% from the moment when the bidder and target start discussions. Okay. So target has a responsibility there also for monitoring media and share price. And here, I think it's come out very nicely where you are giving in one a factoring requirement without factoring requirement if it is -1, and factoring requirement if it is more than 1%.
Okay.
It's come out reasonably well, is what I feel.
Now, Avishkar, in my opinion,
tell me.
2% is minus, the market is down. And my script has increased 3%. In a way, what is happening, market has gone down and my script has gone to 3%. So in a way, effectively, it is an increase to 5%.
Right. So there why we are not...
No. Why are you saying that, Pawan?
His interpretation is because the index was down by 2%, your script first from -2, it has gone till 0 and then 3%. Adding that as absolute. So here also there were multiple discussions surrounding this. In the sense, there were certain suggestions also. So if I have to just again dwell on it, Nifty, when we say Nifty or Sensex movement, there were certain suggestions that we should take sectoral or say if it's a bank, then we should say take a bank index or something like that. So that all was discarded because we wanted to bring in something which is easy and easy to implement. Or if we give multiple things like say Nifty 500, again it will be opening up different issues and all that way. So that was one of the major considerations to take Nifty. Second is the moment you say that it has moved from -2 to this particular regulation is applicable to top 250. So out of 250, only 50 will be the part of Nifty and Sensex will be some 30 odd stocks. So those stocks are not part of that actual -2 movement and all that. So that was the whole idea in the sense to...
But it means you want to say that those who are not Nifty, wherever they are coming, you will take that index?
No. So that we try to create, it will again create, means there will be, okay, I was part of Nifty, not Nifty and all that. So something which is simple and everyone knows, in the sense, instead of making it objective, something means make it objective rather than subjective.
But Avishkar, in Pawan's example, If benchmark index is say -2%, and if you are coming under part C where there is a -3%, correct? And there is a positive news on the company's script is above 5%, 3 plus 2, 5%, okay? Absolute values, I'm saying. The way in which I am reading C, no clarification would be required unless we amend the language there.
Right. So there we will have to read, because say our understanding is as
because there is no ulta equivalent which you have to do for positive news. There is only a requirement of factoring where there is a negative news. There is no factoring required in the positive news. In C, I'm just. But as I said,
same issue is here also in the B part B.
Yeah, go ahead. Tell me the first point.
The part B is all table number 2.
Okay.
Again, same, the index is going up 2%. So it means my script is also going to 2%. And then addition is only 1%. It has gone up.
No, so there the difference is, Pawan, if the index has gone more than 2%, there is a negative news and the company script is say less than 3 plus 2, 5%. You will clarify, because if you see the note which they have given, in case of negative news, so two things. Negative news, you will do opposite. So in a manner that point number 3 applies only to point B and not to A and C. It only applies to B, the way I read it.
But sir, tell me one thing. Is it not a very, very common phenomenon? Avishkar as well can add to it, that the index is going, I'm talking about table 2, index is increasing by 2% and my price is going up by 3%. It's a very, very common phenomena. So then that would mean if I have to give a verification to this point, or in table 3, when the index is going down by 2% and my script is going up by 3%, again I have to give a
Ma'am, I think in this case, table 2, the disclosure will only trigger in price movement when it is 5% or more.
Absolutely. Shivam, bang on. So, yeah.
And just to give one more data point, in the sense when we looked at this, so again, as I said, in ISI for ease of doing business, SEBI is relying wholly on data. In the sense, it's not like say what is one's perception and all. So when we try to look at say 1 year's data basis this particular thing, so what will be the number of verifications one has to do? So across NSE, some 2000 listed entity, the total shortlisted will be around 95, in the sense in a span of 1 year. So a combination of this price movement plus rumor being there in the market for that stock would result into some 95 odd stocks getting shortlisted in a period of 95 days, in a period of a year. That.
Okay. So now
can I come in here for a minute?
Yeah, Geetika, please join.
Yeah, hi. First of all, there may be some disturbances around me. Please excuse me for those. I'm on the road. But while I'm hearing all these percentages, changes, and at what instance will it trigger, at what instance are we supposed to disclose, I'm just taking a step back first to say that in our earlier requirement, I mean, in the existing requirement, it says that we need to confirm or deny whatever rumors of an impending specific material, event, or information. What we are doing through this consultation paper, we are trying to say that we will have price or a material price movement as a criteria instead of material event. I'm just thinking back, stepping back and asking a question. And taking forward the example that Narayan Shankar gave, that today Infosys, say a certain event happened. The price was at a certain level and therefore Money did some disclosure and he denied the rumor. I'm saying tomorrow again, he faces the same thing. How do we know that which event are we talking about? Can an event have a price movement or a price effect only on one day? What happens to the recurring things? What happens something about an event, or say if I confirm something today and tomorrow again the market responds in a certain way and there is a material price movement, what do I do tomorrow? I'm waiting for answers to those kind of questions.
You have to find a rumor.
Correct. Now and then
Geetika, your point is
just a minute.
1 minute. Yeah, go ahead. No, your point is valid. What I wanted to tell is First complete and then I would probably respond to you.
Yeah. So like I said, I took a step back to say that this criteria is only to know what is a material event. Let me now take a step forward. I'm taking forward my own example. That during a day, during a certain period, I may have multiple informations out there, multiple rumors. I have not moved away from my fundamental issue on this entire topic, which was 21,000 newspapers, multiple digital news channels. What we are doing through this consultation paper is just giving me an example of, I mean, frankly, I'm overcomplicating the issue. My issue already was complicated, जहाँ पे मुझे इतना सब ट्रैक करना था. अब मुझे वो भी ट्रैक करना है और ये भी ट्रैक करना है और ढूंढते रहना है कि किस इवेंट का मुझे क्या कंफर्म करना है, रोज क्या कंफर्म करना है. Please correct me if I'm wrong, and maybe that's how I'm seeing it right now.
No, Gitika, very valid point. Gitika, only point what I want to make a mention. You were worser off earlier. Why were you worser off? Because the moment there is a material event disclosed as a rumor, your 24 hours starts irrespective of the price impact. So today you're better off to say there is a rumor. I will first say if it has impacted my price by say that 3%, 4%, 5%, what examples we gave. Only if it is, then you are incumbent to do a clarification. Today they have further clarified because stock exchanges have their own mechanism, Gitika, of having price movement and they will start quizzing you, correct? So today that is going to stop, Gitika. That means this new percentage is going to be the only, that means all the, and Avishkar, correct me if I'm wrong, all the internal guidelines of stock exchange is not going to, they are not going to quiz you that it has gone hard. The only leeway given to them, even if it is not in mainstream media, but if it has gone beyond, they can still quiz you. But otherwise, their leeway or their wide jurisdiction is also curtailed by this paper, number one. Number two, you talked about mainstream. It is yet to come. That is second portion is what I'm telling. So they are, SEBI is yet to clarify what is the truncated mainstream media. Okay, mainstream media is not just 21,000. It is work in progress. They have yet to make a mention as to a lot of other points in terms of, for example, if it was, say, Infosys example, Gitika, if there is a dividend, they would have anyway had to give an advance intimation under 29, correct? So what happens if they have not given it prior to that happens? After that, there are multiple scenarios which is yet to come. This is only part one. So Gitika, picture abhi baki hai. There is many things more to come.
Sir, there is a small point to add to what Gitika said. For example, if on general movements, these price limits are breached. So in all those days where on general movement on account of nothing, the price is being breached, as a compliance officer, I have to give a confirmation that there is no rumor in the market. There is nothing which needs to be disclosed.
No, that is a good point because two things. One, irrespective of however the price is moving, it is presumed. What I'm saying, the paper says it is going to be presumed it is on account of the rumor. That means under this framework, material price movement will be attributable only and only to the rumor and thus would require verification. So hence, the way you and Gitika very nicely put, once you come to know that your price is breached, then you go to your corporate communications department. By rumor ढूंढो कि किसकी वजह से जा रहा है.
नहीं है तो ये भी बताओ कि नहीं है.
क्या नहीं है तो नहीं है बताओ.
है ना, बताना पड़ेगा ना.
Absolutely.
But
it is going to be presumed that you can. Sorry.
Narayan, we have to understand one very important point.
Yes.
Because of SEBI, which is talking, and the Avishkar will agree with me.
Yeah.
Ease of doing business. Now the industry is saying that in place of ease of doing business, if we are making complicated, then it's a challenge and we have to work out in this manner. And whatever we are discussing, it's not easy because I'm flooded with so many questions, not here on email. The people are, if there is a non-clarity, that's why people are asking. Now, one is asking how the percentage variation in skip price is calculated in case B and C for annexure B proposed framework will be calculated if skip price is 200 and above. Also, in all cases where both positive and negative movement will be tracked in skip price.
So we've answered that. So Pawan, what I'm telling is you have to decide, were you better off when this came out or are you better off today? Based on whatever you, Avishkar being on the committee, industry representation, today you're far better off to say that the 24 hours SEBI is listening to industry and saying, instead of starting that 24 hours from the time of the media announcement which happens and you have to scan and your time starts, it's going to, you have given an additional threshold of price movement, which I thought is very good. And the third portion, which is all the more important, which has come and which we have yet to discuss because we have spent too much time on the balance, correct? The other portion is the unaffected price, which is, I thought, a very, very nice movement from SEBI. That means we should go there quickly because we are running out of time. We have gone on point 8.
Second point is very important. Yeah, Geetika.
Go ahead, please.
Yeah, just one quick point, Pawan sir, on what you said, very valid. That, and also responding to Narayan Shankar's point, where we are saying, are we better off from where we were in the last step or worse off? As a compliance officer, I will say worse off. And I am not saying we are talking of ease of compliance here. Because there was a difficulty in trying to understand and comply with this, they came up with this and we'll figure out a way. I mean, we all know we'll figure out a way and do this. There's no denying. But I'm still not moving away, like I always say, from the fundamental thing that we were talking about. It was for ease of doing business. That has not changed. My M&A transactions were anyway complicated. KMPs are anyways in and out doing that work. Now tracking this at all point in time, linking it to a certain thing, thinking about how do I respond, when do I respond, and imagine this 1 or 2 days before your board meeting, where your managing director, CFO, CS, they are doing this versus thinking of what to place before the board or actually discussing a transaction with the counterparty. I'm going back on it. Are we talking about ease of compliance or ease of doing business? If you are saying ease of compliance, maybe this gives me a little more framework to comply than I was 2 months before. But ease of doing business, I'm still standing there. That has not changed.
So getting here, what we have to keep that in mind is this particular thing is coming from ISF, in the sense where this particular note will be going is for regulation change. So whatever the concerns which you raised, like say example that media thing, in the sense defining media and all, that will be, as Narayan Shankar also said, it will be part 2, in the sense where all this part, in the sense at what stage, whether specific rumors and all, that all will be coming at a later stage once the ISF note is finalized and all that. So that will handle all the practical difficulties.
So Avishkar, thank you. But to answer to Geetika, the point which Geetika has mentioned will become valid if you say that industry has a choice to banish this completely. I don't think you have a choice. Today, there is a problem the regulator is facing, and we are trying our best to say, how are you getting standards to this to comply? So your point is, if we don't have to clarify at all, if there is completely taken off, definitely it will all be ease of doing business only. Nobody has to do anything at all. We are trying to tell, do you have that leeway? The answer is, if there is no leeway, then you have to structure it as part of the ISF to say, how can you make it in a manner that early morning, every day, instead of the compliance officer scanning 21,000 newspapers, is this a better way? Is it a better way if we recommend to SEBI that please curtail that mainstream media? They are open to hear. So the answer will depend. If you have a choice, so no problem at all, Geetika. I completely...
No. I'm with you. What I'm saying is that only on the last point I feel I don't think I have a choice. It's not that because of this, I will not have to scan my newspapers. I feel, and I could be wrong here, that I will still have to scan my newspapers to see which news has led to this material price change. Because I'm not the one disclosing.
That's what I'm telling. But that, along with the recommendation to say that don't get us to scan 21,000 regional, non-regional,
No, Narayan,
restricted to top 3, 4. That will be better, sort of.
Narayan,
But I'm saying, Pawan, we should move to the next portion of the unaffected price. Otherwise, we are moving out.
Narayan, this 21,000 another issue. The Standard Forum has curtailed it, and they are coming out. So no need to search. Now I received one mail just now, and one person is saying, in place of doing all these SEAPA mean problem, I will give all information to the markets. I will not check this complicated thing. I will communicate to the market that this is the rumor. Anyway, Ankit, this question, there are 3 questions. Just bring out.
Yeah, I'll come on to that.
Yeah. So first question is whether materiality for the purpose of rumor verification requirement should be considered in terms of material price movement. I think this is a welcome move. And
absolutely.
Yeah. So we should agree on this part. Okay.
Yeah. Yeah.
Now, number 2, whether you agree.
And it is for good, not for bad.
Yeah.
Clearly, it's coming out for good. Yeah. Next.
Whether you agree with the proposed framework for material price movement as given in Annexure B. Now, this is the question which we have discussed since last 40 minutes. So, my point is that it requires more clarification and more simplification. What Aviskar has done the study, Aviskar, we have to give certain things, and whatever suggestion people are giving, the SEBI and Stock Exchange must do something. So it should be easy, because each company should calculate this. It will be a difficult task.
Absolutely. So Annexure B, definitely we are all in for, Pawan. But with the clarification, we talked about negative news, BI going up, BI going down, positive news, factoring, without factoring under A. Then we talked about 24 hours should start from when. Should it be every time, if it is 11 p.m. where it is crossed, from that day or the end of the market? Or end of the evening, for where you, for example, last traded price I get only late. The next point, Avishkar, a question for you.
I think, Narayan, this is very clear.
One question. Also, the band hit is not easily available. Every day, if you don't take a screenshot, it is gone. So you should have a mechanism, Avishkar, where company secretary should be able to get the band hit for their company in the Excel file which we download from you. Otherwise, it becomes difficult.
Right.
Historically, it will be difficult. Suppose you tell a company after 3 days show cause that आपने market rumor किया नहीं है, I will say I don't even know the band date because every day change कर रहा है. मतलब exchange will change.
Narayan, we have to cover.
In this case, what is happening again? This band date thing is for this all 250 companies. Will all have a derivative product, so everyone will have a 10% price band only that. So this is applicable only when the remaining set of companies.
No, but I'll give you my recommendation separate. We can work on. Not to. No, go ahead, please, Pawan.
Avishkar, which benchmark index will be considered for checking the movement in the index for Annexure B?
So it's Nifty or so again there will be question that whether if Nifty is up by 1%, one index is down by say it's 0.95, we have to be taking the conservative means stricter stance, and wherever it is satisfying, we'll have to check whether there's a rumor or not. Because both this index will never be running very much in tandem. That is, if Nifty is up by 1%, the other may not be exactly there.
That example is given even in the consultation paper.
Yeah. Now there could be price movement when there is no rumor in the market, maybe because of some political unrest or interest market. Then do we need to make any disclosure basis just the price movement?
No.
My view is no, Avishkar, unless you say it is required. No. So, एक तो company secretary को you are going to tell rumor ढूंढ के निकालो. अगर वो ढूंढने में सक्षम नहीं हुए, तो you can't be penalizing them. They will say that you didn't find a rumor.
Okay.
So that's why I gave you that data point of 95 instances. In the sense, across 2,000 companies, with this combination, it's only 95 instances.
Yeah.
Okay, Avishkar.
Go ahead.
Another question which is pertaining to the same thing is asking that for how long should one continue to track price movement once there is a market rumor? How do companies capture the applicability of as per the complex metrics?
again,
It is 24 hours on that day, Pawan. 24 hours
Yes,
on
sir.
that day. It is not a continuous
So,
moving.
Consultation paper says that within 24 hours, this price will adjust or react completely
Yeah.
to the
yeah,
news.
in Annexure C, it has been clarified. as
Absolutely. It's clarified, Pawan. Okay.
Yeah.
Next.
Okay. On most cases, companies like example of Infosys will give a clarification upfront upon a rumor, waiting for market price reaction. Would these complex calculations serve a desired object? That's the same. I think this question which we will work out. Are band hits available for all companies and how the same is calculated for different entities?
So, Avishkar, one recommendation from the industry: when we are downloading your Excel file, ensure that you put the bandit. It will really be a great favor for all the company secretaries.
Yes. Okay.
Thank you.
Avishkar, please give the band hits available for all companies and how the same is calculated for different entities.
It's available on the exchange website. And
It's
as
there.
I said, this all 250 companies will have a derivative product. So they have a 10% price band.
Yeah.
Okay.
They close with plus or minus 10%.
Okay, so these are some questions which we will communicate to the market in FAQ form. The third last question in relating to this, whether you agree that rumors shall be required to be verified and confirmed, denied or clarified within 24 hours from the material price movement in place of the earlier the rumor. So earlier there was a rumor and then you verify, now it's a price movement. So what do you say, Geetika and Avishkar and Ankit?
Definitely, if you have the first point, if you say it's a welcome moment, C automatically tags along that it's a welcome moment, that it is after, it's only depending on the price movement. It's not standalone market rumor.
I think, sir,
Okay.
But sir,
the point Narayan Shankar sir mentioned about finding out when the price movement triggers, can there will be some mechanism at exchanges where they send a mail to the compliance officer when the movement triggers in terms of these limits?
Ankit, under the present scenario, exchanges do send these kinds of mails that there has been a sudden increase in the price or in the trading volumes.
But they are doing it voluntary.
But I am saying, Avishkar, I presume now this format will be adopted by all the exchange. Your internal, what I'm saying, those triggers will all go out of the window, if I'm not mistaken.
Right.
So that it's now, what I'm trying to tell, now it is transparent for you to know that this is going to be. Otherwise, sometimes you don't know on what basis the exchange, because they've got their internal mechanism. Now, even exchanges are going to follow this.
Okay, and the next.
You are making a
But
point.
in present,
Yeah.
but under the present scenario, 99% of the companies just reply in 2 lines that there is no UPSI available with them, and whatever information is there in the public domain.
No, so that is going to change. No, Anjali, that is going to change. That will change. You'll find it changing
exactly.
very soon.
In the times to
It
come,
will change.
that would not suffice.
Okay.
No, it will not.
Until
Okay.
next. Until
Yes,
next.
I am moving on to next.
And
So
just-
now coming to part B.
There are, means out of, again, I'm just giving some stats. Out of this 95 instances, there were around, I think so, 14 or 15 instances, the exact 14 instances, where actually the companies have come out and given very good disclosures on that particular aspect.
Very nice to hear this. Very nice to hear.
That's
So
good,
now
actually.
Coming to part B, now we
So
have
Anjali,
discussed
what
about...
you are painting a black brush on all the industry.
I know.
Actually, I am happy
sorry.
that I'm happy that the regulator exchange feels otherwise. It's a very nice breather for a compliance officer like me. Otherwise, we are all painted black and blue by Anjali.
So
Okay,
moving to the next part B, I think when we have talked about considering material movement in price as one of the factor to determine materiality, I think now the another important part is where the consultation paper talks about that once the law mandates a company to come out with a disclosure, either to confirm or deny a rumor, and if a company does so and then it impacts the price, so how, in what manner that price impact will then have an impact or may have an impact on the transaction that was cleared or denied by the company. So where they have talked about a price protection mechanism, whereby companies in that case where they come out and make a disclosure on account of this mandate will be given some kind of a price protection, where the movement in price post the disclosure will be considered or will not be considered in the cases, and to determine the price under the law. For example, under preferential allotment, under various regulations, there is a price method calculation that has been prescribed. So if on account of certain disclosures by way of clarification there is a movement, then that price movement will not be considered for the purpose of determining the price under that relevant regulation, like for example preferential allotment. And in this case, two frameworks have been outlined. One framework is the framework A is the framework which has been suggested by ISEF as part of its recommendation, and framework B is something which SEBI has suggested on its own. So I'll discuss both the framework one by one. Framework A is primarily which talks about that the day when the rumor is confirmed, in the day preceding that day will be the relevant day for the purpose of calculating the price under various regulations, where there is a concept of determining a relevant date to calculate the price. In case of buyback, in case of QIP, in case of preferential allotment, there is all relevant date, and then from that relevant date there is a background calculation in terms of the 90-day, 10-day and other period that have been outlined. And in this way, by doing so, if I fix a relevant date as the date of the disclosure, I discount, or it's not discount, I completely ignore the price movement that happens after that day due to the rumor confirmation on account of this mandate. So this is framework A. Sir, you want to, shall I discuss both the framework and then we discuss each of them?
No, Ankit, I just want to discuss. Avishkar, I think
I'll just complete it. So in terms of challenges, it says that the framework doesn't account for price changes post confirmation leading to potential economic loss. So what happens if for example, if there is an investor who is going to invest in a company by way of preferential allotment, in order to fix a price, he uses this mechanism and creates a rumor in the market, and in a way that so market have to respond to the rumor, company have to respond to that rumor, and when company responds, the price freezes that day, and then even the general movement in that price, which happens on account of normal movement on day-to-day disclosures, other conditions, that will completely be out of the way, and then it may lead to a profit or saving of funds at the end of investor, but it may take away economic benefit for the shareholders, which that investor would otherwise have brought into the company on account of the price movement. So this is a challenge which has been outlined in the framework. Now, sir, it is open for your discussion.
Okay, Avishkar.
So Pawan, go ahead.
I think, Avishkar, we have to explain to the public, because this issue, if you normal read, people will not understand. For the benefit of every person present here, now what is happening? I'm just taking four things: preferential allotment, QIP, delisting, and takeover. Now, delisting price is 60 trading days prior to this, and QIP 10 days prior. Now, suppose I'm taking over a company and I'm doing making a term sheet, then doing due diligence, and then I'm announcing to the market. And then my price will be fixed on the basis of 60 trading days. Now, in case the transaction is going on, because all these transactions start 5 months, 6 months, 4 months in advance. So suppose after 1 month, and normally it is taking 3 more months to declare. So my price will be on the basis of 2 months prior to 60 days prior to the announcement. So here, say after 1 month. So it means,
Ankit, why don't you put the annexure C while Pawan is speaking? It will be great for everybody to just understand what Pawan is saying. Yeah, excellent. They're playing excellent. Stay back. Okay, go ahead, Pawan.
Yeah. So this is a QIP example. So in the QIP example,
We can apply it for preferential. We can apply it to anything, Pawan.
So here it is a QIP example. So let's focus on QIP. It is 10 days before the board meeting. But QIB, when they are investing, they are doing due diligence, other things, and then they announce. So suppose 1 month in advance, some rumor has come that this company is taking the QIB. So market price will go up. So for the QIB, that will not be a favorable thing, and he may not be interested to take, and they can leave this. So the company's entire plan can go in haywire. So that's why the issue came out, this unaffected price. I think Avishkar, you just add more thing for this particular concepts, then we can discuss further.
Avishkar, after you, I will just give some example which we are going through, but it will be great.
Yeah,
Go ahead,
Avishkar.
please, Avishkar.
Yeah.
So in this framework A, so the discussion basically was surrounding this unaffected price, because say if I as a listed entity is being made to do a rumor verification, say in this particular example on 27th July, if there is a rumor, and because of which if we look at that example, the daily VAP has moved from 1060 to 1164. That's a 100 rupees jump in that particular security. So that's clear, and the volumes also have increased from say 44,000 to 7 lakhs and all that. So in such case, then the discussion was we should be giving some sort of a price protection to the entity, which also seems to be fair. That say in this particular case, if we go by the 10 days from 1060 till 13th July 1028 and all that. So that was the whole idea, that in framework A, we give the benefit if we are asking the listed entity to make a disclosure or make the verification, then give it a price protection. But that's, as mentioned in that note, that's a challenge also. In the sense, a set of companies will follow this in the correct spirit. There will be another set of people who may misuse it, in the sense they themselves floating some sort of a rumor and then taking actually going in for a say rumor verification,
Yeah.
and saying that I have a new discovered price. That is the way someone can misuse. So SEBI's discussion paper has put down that challenge also, in case we have to accept framework A.
So, Pawan, in this case, for example, suppose the date of the board meeting is 7th August, but the market rumor, suppose material price rumor, because of market rumor, has happened here on 27th July. So, in framework A, what you are saying, 26th July, it was 1060, which is your normal price. I say Mahindra is going to acquire a company, and the moment they come, it's 100 rupees.
Yes.
So I'm going to say, I'm not going to take over the company with the 100 rupees. So what SEBI today, the paper says that I will freeze time for you for a period of 60 days. That means you can take advantage of it, provided you get the relevant date within 60 days. That means it's not an open-ended thing for you. You can't say that I will float a rumor, but for 1 year I will do nothing, and then even after 1 year say, "Arey, mere ko 27 July ka price do." So what they have done with the check and balance, if the price has gone by 100, I will allow the 10-day prior to 26. I will make a concept of a deemed material event on 27th. That means price up to 26 and 10 days before will be counted, so that all the vagaries of the market after the rumor is clarified goes out. You don't have to go and bother. Otherwise, what you do, Pawan, if it is a preferential issue, suppose I'm negotiating it with a client, with a company, the company is going to give me a preferential issue. They will do it in such a way that the 30 days before the EGM is timed in such a way that after the market is informed, then only after the market is informed, there's no vagaries impacting. But if there is a market rumor and if there is a requirement for me to confirm, I thought it's a golden parachute given for the companies to say, once you confirm, I will put that as a deemed material event. I will only take 10 days before. That is absolute exemption. The second portion in framework B is they're saying we understand between 27th July to 7th August, you may have come with some corporate action. You would have come with some other news. So if you absolutely ignore everything, that means the shareholder is not getting the economic benefit of other transaction. In which case, if you see in framework B, I will freeze 1060 for 3 days. Date of movement, rumor, and the next trading. For 3 days, you will get that price protection. After that, if the price is moved by 5 rupees, I will add 5 rupees to the artificial price of 1060, which is in red. That means after 3 days, they also mentioned broadly, ek do din mein you will come to know. The market has already broadly taken cognizance of that fact and it has reacted. After that, whatever happens to the price, that actual addition and subtraction I will make to the price and come with a 10 days. But in framework B, I'm not changing the relevant date. The relevant date will be the date of approval over here, but adjusted for the price variation with the 3-day protection which you get over there.
But what Avishkar is saying, and I am also saying, in place, somebody's leaking the information.
Yeah.
And suppose some QIV is taking place, and the promoter itself is leaking the information. So price going up. So, or somebody who's taking preferential allotment and somebody is leaking the information. So, point is how to protect that. That is another challenge which we have to discuss. The concept is good, but simultaneously the checks and balance should also be there.
So, Pawan, like UK, you have a 28-day period, correct? They have given you a 60-day period to say that ensure that if you want to get the price protection which is given in your screen, ensure that you do the deal within 60 days, then you get price protection. It cannot be forever.
Okay.
And if it is a bidding where multiple bidders are there, 180 days.
Okay. Okay. Geetika, you want to say something?
Sorry, Anjali was speaking.
Anjali.
Yeah. So, sir, we need to understand the basic premise of each of the laws. Actually, inside preferential allotment is a private transaction between the investor and the company. Whatever price we decide, whatever framework we go ahead with, it has to be decided by the two parties. But when we talk about a buyback or an exit or a delisting or a takeover offer, the purpose of law or purpose of the basic intent of SEBI is to give an exit at the maximum possible price. Now, if we go ahead with the example which is given in Annexure C, and presuming the my price, delisting price, otherwise under the normal scenario is coming out to 1175, which under framework A is getting reduced to 1040. There would be a set of shareholders who would be telling me that why this kind of thing. Even the company, there may be people who will say that the company has circulated the rumor itself, which SEBI has itself put it in the challenges itself. But this kind of a framework has to be seen from law to law. It cannot be made applicable for every transaction, because delisting, we clearly understand that the object of the lawmaker is to give an exit at the highest possible price. And this kind of a reduction in the price may not be acceptable to a few of the shareholders, and there may be.
So in delisting also, if we have to look at, say, whenever this relevant date is up, in delisting, I'm taking two main points where SEBI has worked over the years. One is when we say that this particular price, as Anjali has been articulating, that the price will be lower, but that is used from a base price for delisting. In the sense, the corporate will use this price to say that my base price for delisting is, in this case, say, example, if we follow whatever that mechanism framework, under framework, existing framework, it would have been 1175. So that would have been the base price. It is up to the shareholder to place the bid at whatever is the price in the reverse book building option. Plus, another thing which SEBI has done is, previously this used to happen is, the promoters who want to delist used to inform the board, and then the board used to have the meeting, and then the information used to come out. Now SEBI has clearly said that the moment it is received by the board, that becomes the immediate disclosure and all that. So there are various checks and balances built over the years to see that there's no leakage or it's not impacting the investors per se.
But my 60 trading, correct me, Avishkar, if I'm wrong, but my 60 trading days, the price range that I have to take back in the look back period is still starting from the date I'm receiving the intent from the promoter to go in for delisting. Obviously, the process starts way back, as Pawan sir also said, that the process generally starts around 4 months, 5 months back. The reference. So in that scenario, there can always be those situations wherein the price either goes up or goes down, and there would be people when we give any decision.
Right. So my limited point was, in this case also the investor won't be impacted, because ultimately what we are trying to do is identify a base price. After that, the investor is open to place at whatever price he wants to place the bid.
Okay.
So Anjali, you have to put it. You are only zeroing down on a floor price. You're not. It's not a ceiling, correct? At the end of the day,
Agreed. It's a floor price. Yeah.
so I'm just trying to say, if you want complete protection and much more for the shareholder would definitely prefer framework B because he will get the economic benefit of all the others which happens between 26 July and 7th August. From the perspective of a company, they may want probably framework A because the base price will be much lower in framework A because there is complete exclusion of all the vagaries after 26 July. So there is an artificial deeming, what you call relevant date happening on 27 July. And after that, whatever it helps, it will not. And framework A will also be important if there is a band hit in day one, because this presumes that everything is going to happen in one day. If you are hit the upper band, that spillover may happen for more than 3 to 4 days. That also is not. So both have got its pros and cons.
Okay. So Ankit, can
Yes.
we take up the questions?
Yes, sir.
So now the consultative paper is asking whether the unaffected price should be considered when a listed entity confirms the market rumor due to material price movement. So the first question is, which is very important, because that concept was not there. It was a vanilla. Now they are saying the rumor confirmation date should be taken or not. So what is the view of panelists? Yes or no?
So Pawan, if you ask me, it's a marvelous shot by the ISF. I should say kudos to people like you, Avishkar, who's been members, whether it is Hygri, members from CAM who have really worked hard. I'm going to say I am a beneficiary as a compliance officer and as the company. I'm just a beneficiary of what is happening, of the toil and the hard work which is done by ISF. And this again goes to say when practitioners who are on the ISF, on committees, how different it makes. It's no longer only consultants, it's a mix of industry, practitioners, PCS, everybody. It makes a whole lot of difference. Otherwise, this concept could never be thought of, is what I'm trying to tell.
Okay, but complexity in calculation is not there. And potential manipulation, these two things. Avishkar, the suggestion which has come, the complexity of calculation and the manipulation.
So in this case, what is happening is, even though if we say it's complex and all, at least there's a price protection in place in the sense.
Absolutely.
A new concept has come. That's the important thing, which was not there.
So on one side, we are telling the
Avishkar,
person to do a rumor verification, and on the other side, if we are not giving him price protection,
That will be really quite a blow, Pawan. If imagine if I have to confirm that I'm taking over this company, yes, there is a proposal. And on the other hand, if I don't get price protection, how will I go ahead, Pawan?
No, that is right, but Avishkar, there is another issue. Adjustment of price is also very important. Sometimes what is happening, you have an organical growth of the company, and then rumor is there, then multiple facet is also there. So the price increase on the basis of 2-3 factors. So how we will calculate, that's another complexity. And sometimes the multiple reasons are there. So we have to just suggest to SEBI, and ISF also should work on this, that what are the protection and how calculation can take place when there are multiple things are there.
correct.
I think in that sense, sir, framework B tries to find the middle path. I think framework B is trying to find a middle path.
Absolutely. In a manner, Pawan, yes, because framework B gives you the best of both worlds. You say 3-day protection, you are going to get 3-day protection of price. And after that, the difference in price which happens, actual difference is added or minus, correct? So you get the best of both worlds in framework B.
But I told in the beginning that you cannot satisfy everybody in every situation. So something has to start. So this is a new concept which has come out.
Absolutely.
Let's do.
So I'm going to tell you, thanks to you, Avishkar. Sorry, go ahead. Somebody.
All this data, in the sense even that revamp. Sorry.
No, I think somebody is asking a question. Avishkar, let her complete. Go ahead, please.
No, nobody is asking question.
Somebody was
Anjali ma'am,
Avish-
Anjali ma'am.
Anjali.
Yeah, Avishkar, just one thing I wanted to understand, will the adjusted VAP be available on the sites, on the
So that
portals?
only I
Because
was covering. In the sense, the VWAP is available on our website in the historical data. The adjusted has to be computed. Adjusted is also what the previous.
Oh
no,
my God.
because
Anjali,
see the
if
way it is given.
Avishkar starts doing this, consultants like Anjali will not be. Please give someone to you also, Anjali. What are you doing? If Avishkar gives you all the Excel files.
Sir, because
Sir.
in practical we
But
do
yes,
not
Avishkar, you should also
multiply, we
consider
don't multiply
if
the
the
price
yeah.
of the quantity like this.
Yeah, please. We have two more issues, burning issues. Savitri has come. So, welcome, Savitri. Acha, now, second question. Savitri, I'll come back to you because after completing two things, that this unaffected price, you have to give your comments on this. Okay, now, second is whether you agree with the unaffected price should be applicable for 60 days or 180 days, as the case may be, from the date of confirmation of the market rumor till the relevant date under the existing regulation. Now, we have agreed on this part that unaffected price concept is good, but whether it's a 60 days or 180 days, because 60 days in normal cases, 180 days where there is a competitive
M&A.
things and M&A transactions, where we require the due diligence and other things. So, what is the view? 60 days is perfect, or it should be modified?
It seems reasonable to me, but if there is any other, we can
Ankit,
definitely
you?
hear.
I think any standard timeline would always be difficult because it will depend upon the transaction, at what stage you are in the transaction, at what point you have dispelled the rumor.
Okay.
So it will actually depend, but they have to come to some sort of timeline. So in that case, and I think Narayan sir and Savitri madam, because they are into these kind of transactions, they would have a better sense as to what is a standard general timeline that is there.
Okay, Avishkar, have you received some different view on this?
No, nothing.
This 60 or 180 days is okay.
Yes.
Okay. Now get next.
Savitri ma'am is there.
Hey, Savitri, I'll come Savitri next because three questions should finish first. Now there's a issue whether framework B should be implemented. If yes, provide suggestion to address the challenges mentioned. So the suggestion was SEBI has given a the ISF has suggested option A and the SEBI has suggested another option B. Whether so A or B which should be implemented, that is a question. And if this, so what are the challenges you are feeling that framework B has more challenges in this?
So, Pawan, as I said, I'll wait for Avishkar also to respond. But the biggest challenge in framework B will be it presumes in one day all the impact has already, market has absorbed all the impact, which may be probably sometimes not relevant. Second, if there is a band hit and if the spillover happens for more than 3-4 days, that factoring is not taking place in framework B. If you tweak it to a little bit more and being a little bit more practical, depending on Avishkar, what is your practical experience across the companies, we could probably develop or recommend something better.
Avishkar, you just tell in your opinion, because you are a well-suited place sitting there and getting all types.
When we were looking at this on how to adjust it and all, when we looked at the data also, there were instances where, say, once that news hit, there were multiple days where the price movement has, and there are multiple scripts also. It was not restricted to one or two scripts only that one. But then it could be because of multiple reasons also. Say in this particular case, if there's a board meeting, there is another announcements and all. So where to stop was the question. In the sense, if say example in our case only, if there's a board meeting also announced on 1st August and all, and because of that there's a price movement. So where to stop? So then it was at this stage decided that at least stop at one day, and basis the suggestions which are received, we take the further call that.
Okay. Okay. So I think this Ankit, this part is over.
Yes,
Okay.
sir.
Now, Savitri, it is your turn. Ankit, go back. The Savitri, you are there?
Sir, we can circle back. I think was ma'am joined.
Okay, so I'll go back.
I'll move to part C.
Yeah, Ankit.
So part C is with respect to, since there is an obligation that is being casted to dispel rumor on listed entities. Part C also brings a change in terms of casting an obligation on the promoters, directors, key manager person, and senior management to provide accurate and timely information in response to queries related. At times, there are something which is being done at the level of, for example, promoters, or at the level of key manager person, to which the company is not a party or company is not privy to. Then it is very difficult for the companies to dispel rumors, because in most of the cases, like for where there is a rumor that the promoter is willing to par stake, or something else is going on, in that case, companies are generally not at times party to such cases, and it is difficult for companies to dispel those rumors from their own end. And in most of the cases, I've seen companies say that since we are not privy to those discussions, it's difficult for us to comment. I think to avoid such a situation, this proposal is to cast an obligation on these parties involved to timely inform the company about such events, so that companies are in a position to timely respond to such rumors if they are in the market.
Okay. So first I will start with Avishkar, because Avishkar, you are facing this type of problem when you are issuing. So what is your call? Then I will come to the Narayan Shankar.
So it is basically advantageous from the listed entity and the compliance officer also. So just to give an instance, in the sense the way Ankit also articulated, if there is something surrounding a promoter about his stake and all, typically the stock is reacting, and say when the exchanges write to the companies, they take that particular instance, because the promoters itself will question the compliance officer, where is it written that I have to provide you that data, under which regulation and all that. So here it's basically empowering the listed entity and the compliance officer, basis which he can get the details for the rumor verification purpose.
Okay, Narayan.
So it's a no-brainer, Bhavan. It's a welcome step. There's no need of any discussion on this, because you're going to help all compliance officer, because if you don't get any particular disclosure from the KMP, or this is at least putting onus on them, it's a welcome step. I think there's nothing much to discuss on this.
No, but what types of problem, Ankit, people are facing and the regulator is facing?
So the instance, as I mentioned, with respect to promoters pairing stake, at times there are, for example, some serious cases filed against the MD of a company, or some serious allegations are against him. Then he should be he should provide necessary clarification to the company, so that company can accordingly respond to the market and the exchanges. So because in all other cases where company itself is a party, the board is all senior management, they're always also party to the transaction that is being happening. Either some part of the senior management team or KMPs will be part of the transaction, so they would be in know and they can timely respond. But when it to the other side of the table, it is something which is external to the company, companies generally find it hard to procure or collate that information.
Okay, Savitri, have you joined?
I can see her. Savitri, you're there? I think, but she's on mute. Savitri, you'll have to unmute if you're speaking, please.
I think she's not speaking. Must be some engaged somewhere.
Yeah.
Okay. Anyway,
so the consultation paper just talks about this question. Yeah. I think it's something which is good on the part of the
I think.
Yeah.
And now I think coming on to the last part, as I mentioned in the initial brief of the consultation paper. So there is an obligation on companies to dispel rumor, but all companies are not under obligation to dispel rumor. Only 100 and 150 and 250 companies. But there are other set of companies who are not under obligation to dispel. And in case there is any rumor in the market about something, some M&A, some transaction that they're doing, and they don't come out to either clarify or deny, and then and something is going on within the company which company is aware, and someone trades on behalf of that transaction, and then there is some inquiry, SEBI reaches out, finds out and asks you on that why you have transacted that on the basis of that information, because that was an UPSI, it was only available to privileged people in the company. That individual cannot take a plea that it was not an UPSI, because the rumor is already prevailing in the market. So it's an obligation, because if company is not confirming or denying that rumor, then they cannot take the advantage that it was not an UPSI because it was already circulating in the market. So still, either you come and confirm or deny that rumor, and if you don't do it, you cannot take advantage of both the situations, that you don't disclose also and you take advantage of the same if the market reacts on account of it. So therefore, I think it's a equivalent move to create equilibrium among those who are access to the information, among those who not, and who are just relying on the basis of the rumor. So it says, proposed to ensure that unconfirmed information about market rumors which do not result in material price information cannot be later used by insiders as a defense. Narayan Shankar sir, the only important thing is it talks about material price movement, but I don't think this would be applicable only in case of 100 and 150 and 250 companies.
Ankit, before jumping to the Narayan, I'll just ask Avishkar. Avishkar, when we discuss about this in the committee, this issue has come. So what are the challenges stock exchanges are facing related to this? Because
so the major discussion surrounding this was 3011 always talked about material event, and diverting from that, in the sense the new thing was about material price movement. Now, if we are digressing, say, from material event to material price movement, there could be a scenario where, say, that's why they have used the word such as UPSI, where, say, there's a rumor in the market and it surrounds certain UPSI, in the sense where, say, there could be an HDD entry in the database and all, and that particular item is being discussed in the market. So how to capture it? Because, say, again, when we talk about price movement can be different because of various conditions, in the sense, if, say, example, the market conditions overall are bad, so your stock, even if after a positive news, may not be reacting more than 3% and all. So how to handle that scenarios which are not getting shortlisted in that plus or minus 3% bracket and all. So then this particular clause has been added. So again, just to re-articulate it, say there's a rumor in the market which is UPSI, for which you have already entered in your HDD database and all that, but the price movement is not greater than 3%. So you did not do the rumor verification. But when subsequently, if there is any investigations against you for insider trading or whatever, that time the insider cannot take the leeway that, okay, at a few days back there was a news article in XYZ newspaper, so it's a publicly available information in the market. So that's the whole idea, in the sense to at least safeguard where that price movement is not getting kicked, but it's a material event which is available in public.
Then is this applicable only on companies who are mandated to do a rumor verification?
No, so I'm saying we are getting it probably wrong, Pawan.
I think it will then be applicable to all.
This has got nothing to do with the current. It has got, and it's a well settled matter. If you go somewhere back in time, Hindustan Liver was purchasing some 8 lakh shares from Brookbond India, of Brookbond from UTI. That was, and what was the challenge? That it was based on an UPSI regarding impending merger of HLL with Brookbond. Okay. What was a loophole in the law that time? They said the proposed merger was generally known in media and was cited in press reports, which revealed that knowledge of the proposed merger. The loophole in law was any information which was known in the media could not constitute UPSI. To that, there was the amendment to the PIT that time, which clearly provided that speculative reports in the print or electronic media would not be considered published information. That means if it is in today also, the way UPSI is defined, which is not generally available, which upon becoming generally available, there also there is clarification. I will treat it generally available only upon the company confirming to the stock exchange. Media reports will never be, and will, even in the past, even today, it will never be allowed to say that it is in media. People, insiders can start trading on it as saying it is in media unless the company confirms. So it's got nothing to do with this. It's basic premise of insider trading of saying that no.
Okay, Savitri, your view on this?
Yeah. First of all, sorry I could not join in earlier, and I was on mute for some time because I was handling another
Savitri,
matter.
you please give answer of this, then I'll come to the unaffected price later on.
Sure. Okay. So, in this particular point number 13, there are three aspects which need to be considered. One is company, that is the entity as it is referred to. Second is role of an insider. Third is UPSI. These three terms have an important role in this particular clause. Now, it starts with by saying that if the entity has treated a particular matter as UPSI, this is itself a loaded statement. I'll come to that in a minute. And with respect to the second part of it, as was also explained by Narayan Shankar as well as by Avishkar, it is rightly stated that an insider should not take a plea that it was already available in public domain because it was already there in print media. And the example of Brook Bond HUL is a right example. And that's exactly the case where it was first used. The point here is where the entity has classified certain information as UPSI. What exactly do we mean by this? Are we saying that just because it is entered in SDD, it becomes an UPSI? Or it is UPSI because of an internal policy of the entity? What exactly do we mean? Because the term UPSI itself is open to interpretation. To be on a conservative side, company may have entered in SDD not because genuinely it is one which is going to have an impact, but because they may have put a threshold based on which they may be entering. Having said that, prima facie, the principle that an insider should not take advantage of the fact that it was published in the paper, if that insider, obviously when he's called an insider, he is in possession of that inside information. The term insider as is defined in PIT regulation itself is pretty wide. It includes connected person, and the term connected person will have to be understood in the context of connected person with respect to a particular UPSI. But having said that, not to go into those technicalities, the point here is if a person is aware of something and he trades in that particular script, it is not correct, which is what is sought to be addressed over here. He cannot then take shelter under the fact that it was already in public domain because of a newspaper publication. That's a right approach. However, the term classified it as UPSI requires a little more work on it.
Okay. So anything else, Ankit, you want to add or Avishkar? Acha, now just tell me the
Avishkar or Narayan Shankar with respect to the entity tree classifying it as UPSI. Would you like to just focus on that a bit?
No, it's internal, Savitri, like you very nicely articulated. It has got nothing. SDD is an administrative process. I don't think we should confuse SDD at all.
Correct.
As long as you have got an internal guidelines, what are you going to treat it as UPSI? If it pertains to a market rumor, which you have classified as UPSI, and if you have classified it as UPSI, entry in SDD will be a non-automatic process. So if you have classified it as UPSI, there is a market rumor or there is print and speculative reports are concerned, till the time the company clarifies, it is not going to be published information. It will continue to be UPSI. And you rightly pointed out, and as long as you are in that window, insiders can never take and will never be able to take a call that it is there in economic times, I will start trading from tomorrow. Goes without saying. It's a given thing.
Yeah.
Okay.
Go ahead.
Okay. I have just one question. There was a rumor in the market regarding resignation of a company secretary from one company to another company. The resignation of the KMP is considered unpublished price sensitive information. To replace him, another person was interviewed by the group CFO, MD, followed by chairman of the company. The HR consultant also confirmed the resignation of CS and his junior of joining of another company. Based on the information, the new person joined the organization. Subsequently, the existing CEO withdrew his resignation and through his action and omission ensured that new joiner was put in the situation that lead to resign. This was done with the intent to getting the extension of service even after reaching to the superannuation age. How will consultation paper help in such situation? any advice from the panelists will truly benefit others, preventing from them falling into trap of HR consulting and of the company. Savitri, you have any view on this?
In short, too long a question.
Yeah. Okay.
I don't think, no, I don't think, this kind of an upsee is what is covered over here, because change of a KMP, while it is an upsee as defined in PIT regulations, I don't think that's going to have any major market. Of course, in terms of a managing director or a whole-time director joining, there is a lot of reaction that could be there in certain circumstances. But there are several complexities which have been brought in terms of expectation of an extension and all that, which I don't think we possibly can dissect on a call like this.
Okay, one question is there, that do you think that this require a change in the insider trading code of conduct and in the insider trading law relating to this, if we are approving this?
Nothing required, according.
Not required. Not required. That's
Not
right.
required at all.
Yeah.
And please, the
Avishkar, do you think-
consultation paper cannot address every hypothetical in a question, Pawan. You'll have to understand, this is just a consultation paper. Once this consultation paper is agreed, industry gives the view. There are multiple regulations which may require amendment, whether it is takeover, delisting, ICDR. Whole lot is going then to be grilled to align it to the market rumor and the consultation paper. So this is just the beginning. And once we get more from the ISF, the balanced portions also, and once industry gives their views, but all I'm wanting to say, kudos to the ISF, kudos to the practitioners, all in that we have at least today able to see the light of the day, and we've been able to get a much more better and a much more doable thing in terms of market rumor.
Okay. So now I think we have covered all the.
Yeah.
So I'll come to the Savitri, to you, because you joined late and we want to understand from your side. The other issues are okay. The materiality point we have discussed, that it should be material price event, not the material information. The unaffected price issue, you please tell us certain guidance or certain issues in this, whether this concept which ISF has proposed and SEBI has come out, is it good or it has some problem, or what precaution the SEBI should take?
So with respect to framework B, 60 and 180, I think little more will need to be covered. And I think to some extent, Narayan Shankar also addressed this, heard his answer partly. And, if there are other disclosures, as well as how long is this going to be there, and a spike which is just temporary, I think these are questions which require a little more analysis. So it's not going to be one single announcement which is going to have that impact. Having said that, it's going to have a tremendous benefit in terms of open offers under SAST, as well as preferential issue or QIPs under ICDR. From that perspective, this is certainly a very, very welcome move, because the very next day normally the price has been seen to be going up.
Okay.
So very good concept and very well thought out, I would say.
Do you think any challenge in this and any precaution, or when SEBI will suggest?
Or which framework you like, ma'am?
Sorry?
Which framework you like more in terms of framework A and framework B?
Framework A or framework B?
Framework B.
B?
Yeah.
Avishkar? She's not agreeing our framework.
I don't have any view.
So from an ICDR perspective, ICDR SAST framework A is the best one. But if you're talking in terms of something futuristic, B, I mean, I certainly would agree that framework A, because one day before the thing came into public domain, will be a very simplistic one with respect to ICDR and SAST, and therefore framework A.
Okay. So it means that you are saying combination of both should be there, because something which is price affecting price, and second is the M&A and other type of transaction. So it should be combination of both. So you have made more complication now, huh? Because in your absence, we have discussed the compliance officer's life will be tough anyway. So that is one part. So I think whatever questions has come, I think 1 and 2 questions, so then I can finish it. For new IPO, is grey market premium price legal or not is another view. Published in various public domain is still a rumor, or not even through the price listing is done. Post subscription allotment, some guidance. I don't think this question is relevant here, and this is not the IPO. Grey market is not the rumor, it's a legal market. So a legal market cannot have any impact and nobody can give any direction. Am I right?
Yeah, go ahead, Pawan. Yes, go ahead.
So listed entity should remove from the compliance as after making it mandatory for promoter, etc. Then role of company would be only as a messenger. So the person is saying whatever requirement related to promoter and KMP, the company should not be involved directly. They should be involved. They should be responsible. Is it okay?
I think this is only an enabling provision the way it's been provided, and it is in the right interest. It's not right to say that company only becomes a messenger. That's not so. It is about being able to collect the information and be able to respond.
Okay. Now, rumor is rumor. How it can be confirmed by the company? It is the duty of the investor to verify after rumor with facts and take decision to invest. That is a loud advice somebody. Okay. There could be a material price movement even when there is a no rumor, that we have already covered. Okay. So I think whatever point we have covered, all the points relating to these 4 aspects we have discussed, and Avishkar has given the data information which SEBI is asking today, that whatever you are talking, bring out with data. And the companies, 95 companies which he has given, I think, Avishkar, that should be circulated and it will be good for others to follow this. So as it's a time to close it, as a ritual, I'm just asking everyone about this law and this concept paper. So I'll start with Ankit in 30 seconds. What do you want to say?
I think all these are innovative concepts, something which are, I think, prevalent in UK, as Narayan Shankar mentioned. And it's good to see SEBI actually looking seriously in all these concerns and then forming ISF, where you are also part.
Yeah.
So I think that's something which we should look forward, I think, and the consultation process will go on as there are a lot of other things which ISF is working. So the proposals are good. I think finding a middle path is something different in terms of framework A, framework B, or other frameworks. But some has to be adopted, and it will undergo the required change over the period of time, seeing how market reacts.
Okay. Narayan.
So I think huge plus. So from what it was there in the original Avatar, and today when we are talking about material price movement as the criteria to verify market rumors, the second concept of unaffected price considered with respect to transaction relating to securities, all of them are in the right trajectory. I think, as I said, we are beneficiaries of these developments which are happening at ISF, and undoubtedly kudos to first SEBI to openly listen to industry and ISF to come out with this amazing proposals. Unaffected price, I can't think of. It can only be done by a practitioner who every day goes through this transaction and how he feels that once it confirms, the price can really be a eyesore for the company. So everything coming in is well thought of, is what I feel. There are clarification required. We will all together definitely write to SEBI, write to institutions, and definitely ask for clarification.
Okay, we have done the survey also that I will cover after this. Nitesh, you have any point? Nitesh? Okay.
Not there, sir.
So, Savitri?
I think it's a commendable initiative of SEBI. They initially issued this press release in October asking for suggestions with respect to those 16 points. It basically covered about 25 regulations, and also the consultation process. The entire process has been very well done, and most importantly, ISF, I think it's a brilliant concept, and we have seen a very good consultation paper here in front of us, which was debated and discussed today. The practical approach is something which is really commendable, and it's really good. I think we've had a very positive way of taking it forward. Of course, a bit of tweaking here and there will always be required, but that's exactly the way development and growth actually happens. So, in terms of regulation, being able to understand the needs and to be able to do it, the ICDR, QIPs, SAST requirements have all been very well rolled into this. That's wonderful.
So Savitri, I was thinking that you are on the moon, so I should also be on the hills. So I have changed my background. Yeah, Avishkar.
Oh my God, so sweet.
So SEBI basically, as everyone has clearly articulated, has taken that particular lead. And whenever all this consultation, or even yesterday also, there is this ease of doing business paper which has come out. So everywhere it is backed by data. So as professionals, it also becomes imperative on us that we raise our suggestions or our comments at this stage rather than waiting for the gazette notification and then raising it at a later stage when it becomes a law and all that. So seminars and webinars like this are very helpful in the sense for getting that particular feedback and all that.
Okay. So Shivam, can you just show the poll which we have done?
I think Anjali is also there, sir.
So this is first question which we have asked, that do you agree with the defining materiality in terms of price movement rather than solely relying on event? I think 77% is saying yes. Next is, so that is also the view of the panelists. Which parameter do you consider most crucial for identifying material price movement? Price range of security, movement in benchmark indices, the percentage variation in securities and benchmark, all of the above. So this is the all of the above is high as 51%, and the price range of security. So I think all of the above is prescribed the highest number. Next. Should the timeline for verifying market rumor be tied to the occurrence of the material price movement? Answer is yes. There's a 66% people are saying yes. Next. Which framework do you find more suitable for considering the unaffected price after confirming the market rumor? Framework A, B, neither. Okay. But Savitri is there who is saying both, combination of both. So the framework B is suggesting more effective than the framework A suggested. Next. Obligation of key individual. Do you believe there should be obligation of promoter, director, KMP and senior manager to make the answer of the queries? 89% say yes. So that is also another good suggestion, and the people are agreeing. And the last point is classification of unconfirmed information. Should unconfirmed information related to market rumor be classified as UPSI if it does not result in material price movement? Answer is no. 63% and 38% say yes. So this is so friends, now this is time to end this. So as you are aware that we are doing webinars on every Friday, and our object is whatever new thing is coming, whatever problems of the corporate, we should solve. So in the same line, 19 January, the next Friday, 4 p.m., the SEBI has come out another consultative paper, interim recommendation for the expert committee for facilitating ease of doing business, harmonization of provision of ICDR and LODR. So we are planning to have this program on the next Friday, and because Geetika was the member of this committee, Savitri, another Narayan, you have given suggestion in this, or okay. So one member was there, and Avishkar, you must be part of this. So we will have this program in next week, harmonization of provision of ICDR and LODR. And today, whatever we are discussing, there will also be impact on this. So next Friday, 4 o'clock, we'll again meet with this new topic, ease of doing business, harmonization of ICDR and LODR. That is very, very now important and urgent issue we will discuss. So till then, thank you very much.
Thank you, Pawan.